Up to this point in the videos, we've focused on the transfer tax consequences of trusts. In other words, we've mainly explored the estate, gift, and generation skipping transfer tax systems. But what about plain old trust income taxes? Well, let's first take a look at revocable trusts and ask how much income tax such trusts have to pay. And the answer to that question is that revocable trusts pay no income tax. That's because revocable trusts are disregarded by the IRS. In fact, revocable trusts don't even have a tax ID number because they don't need to file tax returns. All of this means that when you transfer assets into and out of a revocable trust, no tax is triggered. And when assets inside your trust earn income, any income earned simply flows through to you. So, for example, if the trust owns stock and a dividend is paid, that dividend income needs to be reported on your personal income tax return. Again, in a nutshell, the income taxation of revocable trusts is a simple matter because revocable trusts pay no income tax. On the other hand, a revocable trust eventually will become irrevocable. For example, if the grantors of a trust have died, the trust cannot be changed anymore. At that point, by definition, the trust is irrevocable. Now the income tax consequences of that trust come into play. Similarly, when you set up any of the irrevocable trusts discussed in the videos here, you need to be aware of the fact that there might also be income taxes to worry about for them. You see, irrevocable trusts are not disregarded entities by the IRS. That means they pay taxes, and the taxes they do pay can in fact be quite large. Irrevocable trusts require a brand new tax ID number, just like a corporation does when it's established, and they require that the trustee of the trust report the trust's income on a separate income tax return. Incidentally, the way income is reported can be pretty complex, and you will probably need the help of an accountant. Having said that though, many times irrevocable trusts have no taxable income to report. Even if an irrevocable trust does have income though, since trust tax rates are quite high, trustees often opt to distribute such income to the beneficiaries of that trust. In this way, the trust itself will pay no income tax, but the recipient of that income must show it on their individual income tax return, where it will be taxed at their own personal income tax rate. So to recap, revocable trusts do not pay income taxes, and such concerns are therefore a non-issue. Irrevocable trusts, however, might have to pay income taxes, and given their complexity, you'll probably want a good accountant to help you with these income tax issues. To find out more about the taxation of trusts, please schedule a free appointment here at the Trust Store.